Hey, what's good, self-direct investors? I hope you're all doing great, and I want to welcome you back to my channel. If you're new here, my name is Jordan. I'm the mind behind Make More Capital, and today we're coming at you with a midweek update and some MSO earnings. So before we jump in, if you enjoy this video or you learned something, please just leave a like on it as it really helps out my channel. And then, of course, if you want to learn how to take advantage of this generational investment opportunity, subscribe below so that you don't miss any future videos. Then there's plenty of content for you to go back, rewatch, and educate yourself with. I've tried to put all the news and facts in one place so you can watch episodes over time to learn about the evolution of the industry, identify top companies that you keep seeing pop up, and then take advantage whenever you're ready. But we're going to start. Now, first thing I want to let it be known, though, is that we are not expecting the prices to skyrocket after these earnings, because we know, based on the unique situation in the U.S. where cannabis is federally legal, so U.S. capital can't invest, and then the fact that these MSOs trade on the over-the-counter exchange, which is seen as like a risky exchange in the U.S., and on the CSE in Canada. They can't trade on the NASDAQ or the New York Stock Exchange. So it has to be said that we're not expecting the prices to all of a sudden skyrocket after these earnings. Now, obviously, if they were any other industry on any other exchange, they likely would, 100%. But this is a special scenario. So all we are doing with these earnings is making sure to check that the companies are executing as they say they are, and that they're growing their fundamentals and making them more attractive, which we're going to see that they've been doing. But the main thing is that we want to make sure these companies are executing and their fundamentals are as solid as possible, because then in time, what we're waiting on to actually make these share prices move is that safe legislation that will let the U.S. capital finally get in to these very undervalued, attractive companies that most American investors can't access as easily as others. So just wanted to get that clear out of the way. But so we're going to look at Curaleaf. They report their second quarter results for 2021. Second quarter 2021 revenue of $312 million, up 20% sequentially and 166% year over year. So that is huge. Awesome job, Curaleaf. Second quarter 2021 adjusted EBITDA margin of 28% on core U.S. operations, up 400 basis points quarter over quarter. And then second quarter 2021 adjusted EBITDA of $84 million, up 35% sequentially and 201% year over year. While they also closed their acquisition of EMAC, Europe's largest vertically integrated cannabis company, so Curaleaf does have their first step foot in Europe as well. Now, if we scroll down to the numbers, though, we can see total revenue $312 million, up from $260 million last quarter, which is 3 months ago, 20% quarter over quarter increase, which is great. Gross profit before impact of biological assets, $155 million, up from $128, which is a 21% increase. Gross profit on cannabis sales, $154.5 million, up from $128, which is a 21% increase quarter over quarter, with gross margins of cannabis 49.6, so basically 50%. That's very, very healthy fundamentally, with an adjusted EBITDA of $84.3 million, up from $62.6 million, and this is earnings before interest, taxes, depreciation, and amortization. So think of it as profits before interest, taxes, depreciation, and amortization. 35% increase quarter over quarter. And so the only bruise on here you could say is the net income loss of $7.2 million, down from $17.2 million last quarter. So it's good that they're reducing that. But at the same time, when you're the largest MSO aggressively expanding now so that you don't have to pay to expand later when it's going to be more expensive, you know, this is as good as it gets compared to Canadian LPs. And obviously, this is not permanent. This is just a matter of spending money now and then ensuring that your revenue is going to offset what you're spending and hope that they reach profitability sooner than later. But clearly, they're going to be close to there, hopefully even by the end of the year. So that's nice to see. Now, just to be clear, I don't own shares of Curaleaf, but just wanted to go through this for any of you that might. Second quarter highlights, we pretty much just went through all of that, but some of the bottom stuff. In May, they agreed to acquire Los Sueños, a 66-acre outdoor grow in Colorado, so they will obviously be able to increase their footprint with that. Brought online nearly 250,000 square feet of flower canopy during the first half of the year, with a further 40,000 square feet planned for the second half of 2021. So imagine if that's what cost them, $17 million, or just obviously some of this capital expenses went into that. That's not going to cost them money in the future, and that's actually going to bring in more revenue. Opened 5 new stores in Illinois, Pennsylvania, New Jersey, Maine, bringing the total retail locations to 107, and they launched a long-term strategic partnership with Rolling Stone to leverage their select brand and operating experience in Nevada. They opened medical dispensaries in Wells, Maine, bringing the total retail dispensaries to 8, so this is post-second quarter highlights, and then launched B Noble pre-roll brand partnership in Maryland and Massachusetts. So very strong. We can look at their retail revenue, $222 million, up from $187 million, with their wholesale up to $89 million from $72. So great growth across the board, and then they make a little bit from this management fee income, but that is what makes up their total revenue. And then if we look at gross profits on the sales, retail and wholesale revenue, $311 million, cost of goods sold, $156, giving them that just about 50% gross profit margin after subtracting all cost of goods sold. So this is healthy operations for sure. Total revenue, $312 million, gross profits of $184, income loss from operations. So we see a positive net income from operations, but after other income and tax expenses, this does bring them back into the negative. But again, this is temporary, not permanent, so it's just a matter of their expansion and paying for that up front. While their net income lost, then we add back some interest expenses, all the stuff that they would have to pay for, giving them that positive adjusted EBITDA of $84.3 million, profit before subtracting all of these costs. Now, last few things to highlight. Capital expenditures. During the second quarter, Curaleaf invested $41.9 million net in capital expenditures focused on cultivation, processing, and selective retail expansion in strategic markets. So obviously, this is why they're spending some money. You got to spend money to make money, and obviously in time, they hope that this will bring a better return on investment. And as of June 30th, 2021, the company had $334 million of cash, $338 million of outstanding debt, net of unamortized debt discounts. So lots of cash, decent amount of debt, but at the same time, just showing that they are very strong and very financially healthy. Now, I do want to make one comparison to a Canadian LP, and that is Canopy. Because look, if we just take a look at what Curaleaf did, retail revenue, $222 million, wholesale revenue. Actually, let me just jump up to this part here because it's easier to see. So I just want to compare Canopy's recent quarter right now, ending June 30th, to Canopy's fourth quarter fiscal year 2021, which they reported on June 1st. Now, you might think, oh, I'm looking far back. June 1st is 2.5 months ago. So this is just safe to say that Canopy got their fourth quarter in fiscal year 2021 done as quickly as possible so that they could report their Q1, which they just recently reported last week, and I'll touch on that in a moment. 2.5 months later, not even, like just two months and a little bit later. But what I wanted to point out, let me check exactly. So these are results the fourth quarter fiscal year for ended March 31st, 2021. So this is still sales in 2021 from the beginning of the year. And just wanted to note Canopy's Q4 2020. So this is 3 months ago. Canopy did $148 million in revenue, but their net loss, $616 million. An adjusted loss, negative EBITDA of $94 million, and free cash flow of $124 million. When you compare that to Curaleaf, total revenue of $312 million, up from last quarter, $260 million. That was a big difference. And I think this is why Canopy didn't even include a Q1 versus Q4 in their last financial statement, because they made less this most recent quarter than they did in Q4. Now, I'll show you that in a moment, but I do have to also just admit a mistake that I made. In my recent Canopy video, I said that they suffered a net income loss of $389 million, but clearly that's not a net income loss, but let me try to explain why, at least from my best understanding. Now, you may be wondering, how does Canopy post a positive net income of $389 million when, let's say, the quarter before they had lost $616 million? I think it's from accounting trickery, but I'm not an accountant, so I don't necessarily know. All I can do is just try to show you what I'm looking at. And as we see, if they did have a positive $389 million, what they would do then is subtract, though, all of the depreciation, amortization, a lot of what the EBITDA requires they subtract. But then if you look down here at the bottom, other, including non-cash fair value adjustments, then we have a big addition of $658,284,000. Now, from my understanding, it seems as if Canopy did not add this in here, they would have a negative $165 million net income of operations. But from my understanding, this is just them saying, okay, we have about $658 million worth of cannabis that we've grown that we have not sold yet. If we plug this into our non-cash fair value adjustments, then that will allow us to report a positive net income of $389 million. Now, I could be wrong, but this is just me showing that I made a mistake and trying to justify how they got to that, though. Now, if you know accounting better than I do, please let me know in the comments, because obviously I just want to know what the right answer is. But also worth noting that Canopy doesn't have to report in GAAP accounting yet. I believe they're still reporting a lot of their reports in IRS. But regardless, from this point on, I just wanted to scroll up to show you their most recent quarter, because I'm showing you their fourth quarter, now I'm showing you their Q1. And so just to highlight, this was the mistake that I made, but they did make less revenue than they did in Q4, which is kind of shocking and not great, right? Obviously, highlighting that it's night and day between US MSOs and Canadian LPs. And sorry, this is taking me a long while to explain, but obviously just trying to provide as much context as possible. So that is how you see they have a positive net loss, but still a negative EBITDA. And this is their most recent quarter, as of August 6th, a few days ago. So negative $63 million and negative $186 million of free cash flow. So just wanted to show just exactly the difference between MSOs and LPs. But for context, I hope this can show you and see better that the fundamentals do really matter, because ultimately, if we take a look at the Cannabis Investor Portal from MJ Stock Trader on Twitter, thank you, MJ Stock Trader, if we look at Curaleaf, to buy the entire company or a share, they're valued at $8.6 billion. But that's for $312 million of revenue per quarter, and they're estimated to bring in $1.3 billion in 2021, and by the end of 2022, $1.9 billion. If we compare that to Canopy Growth, where you can get them for $7.8 billion, but they only brought in $108 million of cannabis revenue in the most recent quarter, and they're only on pace to bring in $554 million in 2021, and just $798 million by the end of 22. Which one is a better company to pick right now based on the fundamentals? It's an easy answer, right? So hopefully that helps give you a better explanation and just why I'm trying to connect all this together. But that's how I view it. And, hopefully you can pick up from this and get some benefit from it. If you don't, that's okay. Just trying to share my knowledge, but that's essentially what I'm trying to get at. So let's take a look at Verano's reports now. Second quarter 2021 record revenue of $199 million. So this is good to see from Verano. Mind you, this is a lot less from what they were expecting. From some analyst expectations of like $240 million. So for their second quarter summary, revenues increased 39% from the first quarter of 2021 and 164% from the second quarter of 2020 to a record $199 million. Gross profit on an unadjusted basis and excluding the impact of biological assets was $100 million or 50% of revenue compared to $88 million or 61% of revenue in the first quarter of 2021. So the only thing is that their gross margins did go down a little bit, 50% of revenue from 61% of revenue. Their SG&A expenses was $53 million or 27% of revenue compared to $29 million or 20% of revenue in the first quarter. So SG&A, selling, general, and administrative costs did go up a little bit. Their net income, including the impact of biological assets, was $7 million. So I think this is saying if we add the amount of biological assets that we have that have not sold, it's just $7 million. But if we exclude that, the net income is $32 million in the second quarter of 2021 compared to $8 million in the first quarter. Now, again, I'm not an accountant, so how they do that, I don't quite understand. But it's just worth noting that that is some accounting trickery that doesn't really account for real profits or any revenue. So it's just something to consider that that's not a huge metric that you need to take completely seriously. You want to make sure that they're actually, earning profits or earnings after interest, tax, depreciation, amortization. Second quarter adjusted EBITDA was $81 million or 41% of revenue. EBITDA on an adjusted basis was $52 million or 26% of revenues, while their cash flow from operations was $29 million and with free cash flow of $4 million. So let's just scroll down to the chart to check that out. Basically everything that we just read up there we can see. Down here in numbers version. So we can see their revenue is up to $199 million, up from $143, but their cost of sales did increase to $98.5 million, up from $56.4. But again, they're also expanding too heavily and opening more stores for gross profits of $100 million, up from $88. But clearly their gross profit margins have decreased a bit from 50.4 to 61.9 because they're spending quite a bit more. So hopefully they can get that under control. For a gross profit of $75 million, down from $206. Now, again, this is that accounting wizardry in work, something that, that they apply $117 million worth last quarter to get $206 million, but then they subtract 24.9 to get 75.2. I think this is, again, just adding or subtracting cannabis that they have not sold yet. But so obviously this takes away from the profit where it adds different cases. So again, not the most important metric to be looking at anyways. And the day that these companies can uplist and then they have to switch from IFRS, the international accounting standards, to GAAP, the generally accepted accounting principles, that's going to take this away and we most likely won't end up seeing that. But they, after that, a positive net income from operations of $18.2 million, down though again because of this addition of $174 million last quarter. But then we can still see a gain of positive 12 and net income of 6.8 million after all said and done, but still down from last quarter of 125 million. But again, that accounting trickery seems to be a good thing to know. And then if we go down and look here, we can see that they are very healthy cash-wise with cash equivalents of 149 million and other current assets of 422. So roughly though, for the next 12 months, they have over 500 million in current assets that will cover their current liabilities of 287 million. So as long as they keep growing their revenues and their earnings, while subtracting any of their costs, they should be able to get to profitability before they have to end up paying off any more of those assets or selling things that they didn't have to. Now, last thing, just want to go through their operational highlights. So what have they done besides that? In the second quarter, Verano executed on organic expansion plans and brought 7 new dispensaries online across its core markets in Florida, Illinois, New Jersey, and Pennsylvania. The company added 9 fully operational high-volume dispensaries to its portfolio during the second quarter, closing on accretive acquisitions in territories of Arizona, the Healing Center, and Terra Vita in Pennsylvania, as well as another permit for 3 additional dispensaries in Pennsylvania through the NSC transaction. Verano currently has 83 operating dispensaries and anticipates surpassing 90 by the end of 2021, so that's their target set. The company's subordinate voting shares received DTC eligibility, which enhances liquidity and strengthens its presence in the U.S. capital markets. Shortly after closing the second quarter, Verano completed acquisitions of Agrikind and Agronomed Biologics in Pennsylvania, allowing for vertical benefit realization in the state by adding an active 62,000 square foot indoor cultivation and production facility and a permit to build out a second cultivation facility, 6 additional dispensaries, 2 of which the company has already opened. In July, Verano maximized its retail footprint in Ohio with 5 dispensaries upon closing its acquisition of Mad River Remedies, LLC, a high-volume storefront in Dayton. Also in July, Verano strategically expanded its presence in northern Nevada with the announcements of its planned acquisition of Sierra Well, which will add approximately 1,000 square feet of active cultivation and production capacity and 2 top-performing dispensaries in Reno and Carson City. So just to add, I do not own shares of Verano either. Sadly, I just see them been doing a lot of acquisitions and hoping that these are going to pay off. And just reminds me of the LPs back in 2019. Maybe it will, but for that reason, I have avoided Verano myself. But these numbers seem pretty impressive, so there's no reason to believe that, they're not very attractive at these growth numbers when they're just trading at, a valuation market cap of $4.4 billion. So awesome job, Verano, there. Lastly, Harvest Health and Recreation Inc. reports second quarter 2021 financial results. So we're going to cover Harvest as they're getting ready to be acquired by Trulieve. Second quarter revenue was $102.5 million, up 84% from the second quarter of 2020 and 15% sequentially. So this is obviously driven by Arizona's strong adult use sales as well, but good growth out of Harvest to see this. Second quarter net loss before non-controlling interest was $19.2 million compared to $23 million in the first quarter. So they are decreasing that net loss, and these are again temporary loss numbers that will hopefully become positive in time once they reach profitability. Adjusted EBITDA was $28 million in the second quarter compared to $26.9 million in the first quarter of 2021. So that is up a little bit, and obviously good to see that number going up. 2021 revenue target of at least $400 million maintained. So whole idea though, just want to show you with Harvest is that if they can do $400 million in the entire year, which they're anticipating that they will do, Harvest Health right now is valued at $1.6 billion. So you'd be getting, based on their full 2021 numbers, $400 million in revenue times 4, $1.6 billion. And if we look at what they plan to do in 2022, 600, then you're getting them at a price to sales right now of 4, or price to sales for 2020's numbers of 3. And that's a very cheap price to sales multiple. In any other industry, on any other exchange where U.S. capital would access, that would be eaten up very quickly. But at the same time, Harvest is going to be bought up by Trulieve, and Trulieve has valued them in that deal at $2.1 billion. So once those shares convert, they're going to be converted for $500 million more than what we see here at 1.6. I'm just going to stop talking now and just go through the numbers. But total revenue in the second quarter was up to $102.5 million, an increase of 84% from $55.7 million in the second quarter of 2020, and up 15% compared to $88.8 million in the first quarter of 2021. While their gross profit in the second quarter was $52.3 million compared to $23.4 million in the second quarter of last year, and $47.9 million in the first quarter of 2021. So sadly, though, as we can see, to expand your revenue, it usually does require you spending a bit more money, and that is why their gross profit margin in the second quarter was 51%, compared to 42% last year in the second quarter of 2020, which is good, but down a little bit from that 53.9% that they had in the first quarter. Net loss before controlling interest, we just mentioned that. And adjusted EBITDA in the second quarter, we mentioned that as well. So let's go through the highlights, though. On May 7th, 2021, Trulieve announced its planned acquisition of Harvest. Each Harvest share is expected to receive 0.117 shares of Trulieve for each Harvest share, representing total consideration of approximately $2.1 billion and a 34% premium to the May 7, 2021 closing price of the Harvest shares. So you would take however many Harvest shares that you have and multiply by 0.117 to get the amount of Trulieve shares that will convert to. On May 7, 2021, Harvest announced that a settlement was reached regarding the grower processor permittee, Agromed Industries of PA LLC. Harvest opened 4 new medical retail dispensaries in Florida, in Lehigh Acres, North Miami Beach, Olympia Heights, and West Palm Beach, and 1 new medical retail dispensary in York, Pennsylvania. And as of June 30th, 2021, Harvest owned, operated, and managed 42 total retail locations in 5 states, including 15 open dispensaries in Arizona. And the recent developments: in July, Harvest announced the conversion of the exercise price of selected warrants to US dollars and the acceleration of the expiry dates of warrants issued in October 2020. On July 12th, Harvest filed a definitive proxy statement with the Securities and Exchange Commission and CEDAR for its annual and special shareholder meeting to be held on August 11th, 2021. Today, wild. So it seems like they're just ready to get this acquisition done with, and they want to become part of Trulieve. Apparently, I didn't listen to the conference call yesterday, but apparently it was just 15 minutes, and then they mic drop because they're like, yeah, we're good. July 15th, 2021, Harvest announced the divestiture of cultivation and processing assets in Utah for an immaterial amount of cash. Harvest opened 1 new medical retail dispensary on July 15th in South Beach, Miami, Florida. Harvest opened 1 new dispensary serving medical patients and adult use customers on August 6th in Mesa, Arizona. And as of August 10th, Harvest owned, operated, managed 44. So recent developments after what we saw at the end of the second quarter is that they're now up to 44 retail locations, and their outlook: Harvest is maintaining full year 2021 revenue targets of $400 million. Reported gross margins are expected to be above 50% and will likely fluctuate quarter to quarter. And from the looks of it, it seems like Harvest just is ready for the deal to close and become part of Trulieve, and that since the deal has been announced, management has not gone off the rails, which is a good thing to point out. But as we can see, their cash has decreased a little bit from the end of last year, 2020, down to $71 million, and their total current assets have decreased down to $150 $55 million, while their total current liabilities is $195 million. So you don't necessarily want to see when their total current assets are less than their total current liabilities, but in the next few months, this deal is going to close, and this is just going to become part of Trueleaf's problem. And Trueleaf is financially very healthy, so this is something that they'll be able to deal with easily, but at the same time, just pointing that out, if they weren't going to be acquired and this deal wasn't going to go through, then that might be something to be worried about. But then if we just go down here, we can scroll. Unfortunately, they just don't have the numbers compared from, Q2 to Q1, which I like to look at, because this would be 102 up from 88, and we can see how much their cost of goods was last quarter. But essentially, this is everything broken down from what I covered above. But they are bringing in positive operating income from operations as opposed to negative, which we saw last year, which just means they're getting closer to profitability. And yes, just getting closer and closer every time. Mind you, they're just going to become part of Trueleaf soon. So congratulations, Harvest. I do own shares of Harvest Health because I was betting that they were going to see some good results based on that Arizona legalizing adult use. But I'm going to hold them so that they become Trueleaf shares, as I do want to own Trueleaf, as I see them being one of the lower valued MSOs at just $4.5 billion based on what they're expected to do in 2021 and 2022 revenue estimates. So that's why I'm happy to own that. But that is it for the MSO earnings. So obviously we will have Green Thumb tonight, and I will try to cover the rest on Friday. But hopefully you got some value out of that. And again, I'm not a financial advisor, just a self-taught investor looking at what I think is important. And the main metric I like to use for these companies is the price to sales. So not to say that everyone has to use that, but from my understanding, this is something I've become comfortable with. And as I just check everything that these companies are doing, I keep an eye on them on Twitter, and I look at their management, what their management teams are doing. That's how I try to keep an eye on these companies. But on to some news. As we can see, this comes from Craig Hallum. But what they anticipate the U.S. legal cannabis spending is going to be in the next decade. So from where we're at right now, 2021, they expect legal spending to be at $25.4 billion, up to $31.5 billion next year, $38.9 billion in 2023, $44.1 billion in 2024, yada yada. You can see the rest and figure this out for yourself. But why I want to add this is because last video or a few videos back, I mentioned that the total addressable market could be $100 billion the faster that states reform and, eliminate the black market for a legal accessible market that can actually bring in this revenue and collect the tax dollars and provide the jobs. So this is like a best case scenario if all the states do end up legalizing for adult use in the coming decade, and that way we do eliminate as much of the black market as possible. But the slower it takes for states to reform, the less we end up seeing this. So this is a very great possibility, and I just wanted to highlight that for that reason. But ultimately, this just requires more states legalizing, which seems like they are. Obviously, this year we had multiple, 5 or 6 of them with New York, New Jersey, Arizona, and then New Mexico, Virginia. So yeah, again, just as more states do this, and we have Pennsylvania, Maryland, Florida, hopefully Texas coming on the next coming years, that will just do a very good amount of work eliminating market share from the black market and bringing that to the legal market, while Craig Hallum also provides this. So I want to thank you, Todd Harrison, for providing these snippets so I can share them. Improving fundamentals, attractive valuations, and envious onlookers keep us bullish heading into Q2 earnings. Our call: U.S. cannabis multi-state operator MSO stocks are off 30% from their February peaks due to capital market dynamics discussed in several notes over the past 6 months. Custody, prime broker, compliance restrictions, new equity issuances. So again, they're highlighting that the reason for this pullback is because of custody, prime broker compliance restrictions. This is, again, something that us, the retail investor, can't control, but it's what the institutions are doing behind the scenes that, obviously have been the reason why we've seen the sell-off, because they're not allowing people to buy, but that gives us reason to believe that when SAFE passes, that is going to be the green light and the starting gun for the numbers to shoot back up. Despite this backdrop, we're bullish heading into Q2 and firmly believe patience will pay for MSO investors. Estimates are higher, valuations are lower, outsiders are green with envy, momentum at the federal level is accelerating. So as long as these companies show that they are getting healthier and healthier fundamentally, the lower their share prices fall, the more attractive they just become, ultimately. And it's just a game of patience and being able to wait until that legislation passes that allows U.S. capital to get in. And as we move here, here's how New York's next governor stands on cannabis legalization. And yes, great news, Cuomo had to resign based on his shenanigans, which, hey, yeah, good, get him out of there. But that's good news because Cuomo announced this morning or yesterday that he would resign days after the release of a damning report found that he had sexually harassed multiple women and may face criminal charges. His resignation would take effect on August 24th. With Cuomo's departure, New York Lieutenant Governor Kathy Hochul will step into the spotlight in Albany. What does this mean for New York's coming adult use cannabis market? The short answer, good news. Hochul's position on cannabis legalization has in the near past mirrored that of Cuomo, pragmatic but not passionate. But it's time to finally legalize recreational cannabis and create an equitable adult use cannabis program that generates much needed revenue of New York. And the fear was that Cuomo was not going to do what he needed to do to get the whole process of New York moving faster. But people are led to believe that Kathy will help get this process going. Because imagine, if Cuomo has papers on his desk, all he has to do is sign them to get this ball rolling, and he just hasn't done that yet. So the odds are, hey, in our favor that Cuomo has to resign, we bring in someone new, and she realizes like, oh yeah, it's time to finally legalize recreational cannabis. All she has to do is sign those papers. So hopefully she can do that, but obviously if she's, has any sense in her head, common sense, all she has to do is sign this to get the ball rolling, which is good for everyone in New York, which is good for all the social equity applicants in New York, and which is good for the entire industry in New York in general. So let's hope she gets that and can get that ball rolling. Camilo gets it. This again from Todd Harrison. From BTIG, what you should know. News that Andrew Cuomo has resigned from New York. So apparently investors think this is very good news as well. Effective in 14 days, should be viewed most positively for Curaleaf, buy 34 price target, and to a lesser extent other MSOs with exposure to the state like Green Thumb, GTI with a buy price target of 73, and Cresco with a buy price target of 24, Columbia Care not rated in these terms, we believe. As discussed in our note last Friday, just a little patience. We wrote that Cuomo has been dragging his feet with respect to signing whole flower sales into law, and more importantly, naming members to the New York Cannabis Control Board so that they could get the ball rolling. This lack of action has created unnecessary delays in kickstarting the adult use program, which now is looking like it will commence in early 2023. We believe his successor, Lieutenant Governor Kathy Hochul, will be much more expedient in progressing the legal cannabis market in New York, as she appears to be more pro-cannabis than Cuomo ever was, and understands the economics, jobs, fiscal tax revenue, and societal decriminalization benefit New York will have a result. Boom. So this just reiterates what I had tried to mention off the top there. So yeah, that is great. All analysts think that this is good news for New York and better than we could have hoped for. So good on you, Cuomo, for resigning because you are not a leader. On to Wisconsin. Lawmakers unveil new cannabis legalization bill at a cannabis shop in Illinois. Get this, how funny. A trio of Wisconsin lawmakers traveled across the state line to an Illinois cannabis store on Tuesday to announce the filing of new legislation to legalize cannabis for adults in their own state. The three Wisconsin Democrats, Senator Melissa Agard, Reps David Bowen, and Mark Spritzer, held the event outside a dispensary in South Beloit, Illinois, which sits on the border of Wisconsin. They were joined by Beloit City Council President Clinton Anderson. All you have to do is look right away. All you have to do is look right that way and you'll see the state of Wisconsin, Agard said, from a Sunnyside dispensary that is owned by Cresco Labs. Shop's parking lot gesturing north and describing her state as an island of prohibition. Yes, she pointed out a number of the vehicles in the parking lot had Wisconsin plates and shared that some of the store employees were in fact Wisconsin residents. Yeah, if you can't get a job in Wisconsin, you're going to go somewhere else where you can. So this is why if you're in the U.S., go to the opportunity. Don't wait around. It's not going to come to you in time. Go to the opportunity. This is just amazing because it's showing that the reality is catching up, or these politicians are catching up to the reality. Then we have this one, cannabis sales increased in multiple states during COVID study finds. Yeah, you didn't need a full-on study to find this. You could have just watched my channel or use some common sense to read the data. But regardless, this tells us what we already know, and it's great news. Legal cannabis sales in multiple states reached record highs in mid-2020 despite a recession and a global pandemic as coronavirus spread across the nation, according to a new study. To date, sales in the 4 states examined in the analysis, Alaska, Colorado, Oregon, Washington, have increased more during the COVID-19 pandemic than the 2 previous years. Yeah, that's the case in most of the states too. So while the authors didn't attempt to determine the causes behind the increased sales, they speculated the boost might be related to a number of different factors. Increased cannabis use among individuals coping with stress, probably. Stay-at-home orders pushing consumers from illicit market to licensed stores, probably. And again, you feel safer getting your cannabis from a legal packaged product as opposed to getting it from some, drug dealer who might not wash his hands. Possible price increases due to rising demand and or purchasing of more expensive cannabis products, such as oils and concentrates. Now, there's no reason to look for this. It's just the fact that cannabis as a plant is a great medicine and it helps with a lot of issues. That's also likely why. And this year has caused a lot of issues, especially from the lockdowns, the stress and all that. And yes, no wonder cannabis is a great relief for many people. And then sadly, just wanted to point this out, a former anti-cannabis congressman and top Trump health official joins cannabis company board document show. The hypocrisy is real, but this is what you get when you don't have integrity and you're a coward and your views can be bought. Because when you have integrity, your values drive your decisions. So it's based on what you believe and what you know or what you learn. Then you make your decisions based on that. But when you're a coward, it's like, oh, I don't really know what I believe. So if someone's willing to offer you money to believe this certain thing, like most politicians, oh yeah, sure, they'll just conform into that belief system. So that's just the difference between having integrity and not. Just wanted to point that out. But as we can see, a former head of the U.S. Department of Health and Human Services is serving as a member of the board of directors for a medical cannabis business in Georgia, according to documents obtained by the Marijuana moment. Well, Tom Price, though, who served as HHS secretary under President Donald Trump for 7 months before resigning following criticisms under hundreds of thousands of dollars of travel expenses, so a guy that has a spending problem, is listed as a board member of Botanical Sciences LLC, one of 6 cannabis businesses to win licenses last month under Georgia's limited medical cannabis program. A former congressman who repeatedly voted against cannabis reform, Price's involvement in the industry is notable on its own. So clearly it's a man who now, since cannabis is being lobbied for, he's willing to join the board. But because in the past it was being lobbied against, it's just so ridiculous that American politicians can be bought so easily for such little money. It's pathetic. But it's also the case that as Health and Human Services Secretary, he was empowered to initiate proceedings to formally recognize cannabis's medical value and reschedule it under federal law, a move he chose not to take. And now he's apparently part of an industry that's generating billions of dollars in sales every year, although he'd done everything in his power previously to stop this industry, and now he's just piggybacking on the backs of the individuals who grew it themselves. So this is why you want to dislike people like Tom Price that can be bought and have zero integrity. They are spineless. To say that Price resisted reform before joining the board of a medical cannabis company may be putting it lightly. As a congressman, he voted 6 times against appropriations bill amendments to simply shield state medical cannabis programs from federal interference by the Department of Justice. Those protections were eventually enacted over his objection and remain part of federal spending law today. And on 3 occasions, he also opposed appropriation measures to allow U.S. Department of Veterans Affairs doctors to recommend medical cannabis for their own military veterans patients. This is pathetic, and this is something that was just voted on and passed and changed just recently. So I hope this helps you realize that U.S. politicians are no smarter than you. They're just willing to be slimier than you. And if you're not willing to be slimy, good. You have integrity. I don't want to be slimy either. That's why I'm trying to build this on my own and, build my own wealth from investing, right? But it just goes to show that it's easier to be like that. But you don't want to be like that. Or at least knowing I'm not like that is what helps me sleep at night, and it's likely what helps you sleep at night too. And then lastly, though, just to highlight why now might be a good time to buy US-focused cannabis stocks, and this is even coming from a Canadian publication, the Globe and Mail. So I'm just going to go through here and find the important snippet to highlight. US cannabis operators, meantime, are methodically building up their businesses in the growing number of states that have either fully legalized cannabis or allow it for medical use. However, they're restricted in raising capital. Banks in the US are deterred from dealing with companies that sell cannabis or related products while it's considered illegal at the federal level, and cannabis companies can't list on large stock exchanges. So this is the problem that's highlighted. As much as federal legalization is a thing, this is the real issue why investors can't get in and why the share prices have not taken off despite amazing fundamentals. But get this, it says it as clearly as possible. Clearer than I can say it. If those restrictions eventually ease, so basically if legislation like SAFE passes that would change this, as many analysts expect, myself, you included, it will be a big boost for cannabis companies on both sides of the border. So basically, we're all just saying is when SAFE passes, that's when we're going to see the big jump. So develop the patience as best as you can to wait until SAFE passes, because ultimately that is when we will be rewarded. U.S. multi-state operators are juicy takeover targets for Canadian companies. Easier said than done, I think. For instance, Smith Falls, Ontario-based Canopy Growth Corp. standing agreements to buy holdings in U.S.-based cannabis companies when federal legalization occurs in the U.S. And this explains why Canopy is lobbying so much in the U.S., because spending a lot in Canada to try to become the market share leader did not work, so they see it's a better return on investment to spend their money lobbying for legalization. That way, sooner than later, they will own acreage and a portion of TerrAscend, which will make their balance sheets fundamentally healthier. And so I just wanted to use this to really highlight where we're at. If you watch this channel, you're probably have a deeper understanding of all the moving parts and that SAFE is really what we need. If you watch bits and pieces, it's going to be a little more complicated. But I want to use this to explain where we're at and just recap at the beginning. Because of the unique circumstances, the prices aren't going to go up on solid fundamentals, whereas in any other industry, on any other exchanges, they would. We need SAFE. We need this legislation that will allow U.S. investors to get in, because that is trillions of dollars that will eventually drive the prices up. So again, just to highlight, if those restrictions eventually ease, now we know it's not a matter of if, it's a matter of when the restrictions eventually ease. We don't know when. It's not our game, it's the game of Congress and Wall Street. We're just playing. But the fact that we know is it could be in the fall, but according to Boris, who's works closely with Congress and is giving us this information, he thinks the latest it can happen is April 2022. That is the latest. And so with that knowledge and understanding and everything I've tried to relay on this channel, we can replace that if with when. When those restrictions eventually ease, as many analysts expect, it will be a big boost for cannabis companies on both sides of the border. And again, we don't know if it's going to be in the fall, but we don't know if it's going to be in the spring, but it's going to be, by April 2022 most likely. So as long as you prepare for that in any sort of way that allows you to keep your investments invested and so that you can stay patient until then, you will be rewarded. I've done that in the past. I've been rewarded, and that's why I'm doing it again. That is it for today's episode, folks. I want to thank you so much for tuning in, and I really hope you got some value out of it. What did you think of the Curaleaf, Verano, and Harvest earnings? Let me know in the comments what you liked about them, what you didn't like. Otherwise, if you have any questions or concerns, please let me know so I can address them and so that we can have a debate. But besides that, if you enjoyed this video or you learned something, please just leave a like on it. Subscribe below if you don't want to miss any future videos, and I will catch you on Friday for a recap of Green Thumb, Trulieve, and Cresco Labs earnings. Have a great day, everybody.